Welcome to Global Experts Network Learning Platform. Having completed all 17 modules of our financial modeling course, we will now conduct a comprehensive 25-minute master summary. This session is designed to consolidate your knowledge and provide a cohesive view of the entire modeling lifecycle. We began with the foundations in Module 1, exploring the various types of financial models and the critical roles of stakeholders. We established the core principles of good model design, transparency, flexibility, and auditability, while addressing the professional ethics and standards that underpin every reliable analysis. At the 1-minute mark, we transitioned to the technical engine of our craft. Module 2 was not just about using Excel, it was about mastering Excel for the specific high-intensity requirements of professional modeling. Efficiency here is the foundation of accuracy. In Module 2, you learned the structural standards that make a model auditable. We mastered keyboard shortcuts to eliminate mouse dependency and explored advanced cell referencing. You became proficient in essential functions like XLOOKUP and index match, and learned to use data validation and named ranges to build models that are both robust and user-friendly for all stakeholders. In our second minute, we addressed the accounting engine. Module 3 served as our refresher on the language of business. Without a deep understanding of how transactions flow through the three statements, a model is merely a collection of numbers without context. We explored revenue recognition and cost structures in depth. We mastered the mechanics of non-cash items like depreciation and amortization, and learned how working capital and capital expenditure impact the project's cash profile. Most importantly, you learned the logic of linking the income statement to the balance sheet and cash flow statement, creating a single, integrated financial ecosystem. Moving into the third minute, we focused on architecture. Module 4 established the professional framework for building a model from the ground up. This structural integrity is what ensures your analysis can withstand the scrutiny of an investment committee or a senior credit officer. We implemented the input calculation output framework, ensuring that hard codes are never buried in formulas. You learned industry standard color coding and the use of centralized assumption sheets. We also mastered scenario controls and audit checks, alongside the critical management of circular references, ensuring your model documentation is as professional as the calculations themselves. At the 4-minute mark, we look at the top line. Module 5 explored the subjective art of revenue modeling. Predicting the future requires a blend of historical data analysis and forward-looking market insights. Accuracy here is paramount for everything that follows. You learn to build volume times price models and customer-based subscription forecasts. We explored growth rate forecasting, market size analysis, and the impact of seasonality. Crucially, you mastered sensitivity analysis to understand how changes in price and demand can drastically alter the project's financial feasibility and overall valuation. Entering our 5th minute, we examined costs. Module 6 moved us from the top line to the operational details. Understanding the cost drivers of a business is the key to identifying operational efficiency and project sustainability over the long term. In Module 6, we built detailed staffing and payroll models, analyzed fixed versus variable costs. You mastered unit economics and cost escalation modeling to account for inflation. By using efficiency ratios, you learned to monitor and predict the operational health of a project, ensuring that your expense projections are as rigorous as your revenue forecasts. In the 6th minute, we look at the long-term assets. Module 7 focused on the life cycle of capital expenditure. Accurately modeling asset acquisition and replacement is vital for understanding the true cash requirements and tax obligations of any capital-intensive business. You learn to maintain detailed asset registers and apply appropriate depreciation methods. We explored replacement cycles and the modeling of intangible assets. By establishing clear capitalization policies within your model, you ensured that the long-term investment profile of the business is accurately reflected in both the balance sheet and the cash flow statement. Moving into the 7th minute, we address working capital. Module 8 reminded us that profit is not cash. Managing the timing of receivables and payables is the difference between a successful operation and a liquidity crisis. Timing is everything in finance. In Module 8, we modeled inventory cycles and the cash conversion cycle. We addressed seasonal funding needs and the use of revolving credit facilities to manage short-term liquidity, ensuring the business remains solvent throughout its operational fluctuations. At the 8-minute mark, we reached a major milestone. Module 9 brought all these components together into the integrated 3-statement model. This is the gold standard of financial modeling, providing a dynamic and holistic view of a company's financial future. You built the forecasted income statement, balance sheet, and cash flow statement as a single, self-balancing unit. You incorporated detailed debt schedules and interest calculations, and most importantly, you implemented rigorous balancing tests. This ensures that every dollar is accounted for, providing absolute confidence in the model's technical integrity and auditability. In our 9th minute, we looked beyond operations to financing. Module 10 explored how a business is funded. The structure of the capital stack, balancing debt and equity, is what determines the project's cost of capital and the sponsor's ultimate return potential. In Module 10, we mastered amortization schedules, grace periods, and covenant testing. We also modeled equity raises, dividend flows, and the impact of retained earnings, ensuring you can reflect a complete and realistic capital structure. Entering the 10th minute, we reached the core of investment analysis, valuation. Module 11 taught us to use our projections to answer the fundamental question, what is the business worth? This is where modeling results transform into investment decisions. You mastered discounted cash flow analysis, free cash flow to the firm, and various terminal value methods. We also explored relative valuation using comparable companies and precedent transactions. By conducting valuation sensitivity analysis, you learn to view a company's worth not as a single number, but as a range of outcomes driven by key assumptions. At 11 minutes, we addressed the reality of uncertainty. Module 12 focused on scenario and stress testing. A robust model must prepare its users for the unexpected, providing a clear map of the risks and rewards under different economic conditions. We implemented base, upside, and downside cases using advanced data tables. You learned to build tornado charts to identify key drivers and conducted break-even analysis. We even introduced Monte Carlo simulations and banking-style stress tests, ensuring you can communicate risk clearly to any investment committee or board of directors. In our 12th minute, we examined the indicators of performance and creditworthiness. Module 13 taught us to use financial ratios to monitor a business's health. These metrics are the early warning signals that allow an analyst to identify potential trouble before it becomes a crisis. We covered liquidity, profitability, solvency, and efficiency ratios in depth. You learned to calculate debt service coverage and conduct rigorous covenant testing. These tools are essential for credit analysis and ongoing financial health monitoring, ensuring that every project remains within its safe operating boundaries. Moving into the 13th minute, we adapted our skills to specialized sectors. Module 14 explored modeling for SMEs and microfinance. Financial modeling is a universal discipline, and its application to smaller-scale entrepreneurial ventures is vital for driving economic growth in emerging markets. You learn to build specialized models for agricultural projects, manufacturing businesses, and group lending. We created microloan cash flow models that account for the unique risk profiles of small businesses. This demonstrated your ability to apply professional, institutional modeling standards to any business size or sector globally. At the 14-minute mark, we focused on the final deliverable, communication. Module 15 taught us that a model's value is realized through its presentation. Distilling complex data into clear, actionable insights is the final mark of a senior financial professional. You mastered the creation of executive summary sheets and investor dashboards. We focused on the design of impactful charts and the art of the board-ready investment memo. You learned sophisticated walkthrough techniques, ensuring you can guide stakeholders through your model's logic and conclusions with absolute clarity and professional confidence. In our 15th minute, we pushed into the territory of the power user. Module 16 explored advanced topics that elevate an analyst's productivity and technical range. We moved beyond corporate finance into the complex worlds of project finance and automated data transformation. You mastered project finance debt sculpting, PPP structures, and complex IRR waterfalls. We also learned to manage technical circularity professionally and leveraged VBA and Power Query to build automated data pipelines. These tools allow you to handle massive datasets and repetitive tasks with incredible speed and institutional consistency. Finally, in the 16th minute, everything culminated in the capstone project. Module 17 was your opportunity to build a complete professional-grade model from scratch and defend it before your peers and instructors. This was the ultimate test of your skills and judgment. You analyzed the GreenTech solar case, built a fully integrated project finance model, and underwent a rigorous peer review process. Your final presentation and investment memorandum demonstrated that you are truly ready for high-stakes modeling roles in investment banking, private equity, and corporate finance globally. As we approach the end of our 25-minute summary, look back at how far you have come. From basic Excel formatting to advanced automation and project finance sculpting, you have acquired a professional skill set that is in high demand across the global financial markets. The key takeaways of this journey are integrity, technical accuracy, and clear communication. Financial modeling is a discipline that requires continuous practice and refinement. Use the foundations we have established to build amazing models and drive informed, logic-based decision-making throughout your professional career. Thank you for choosing Global Experts Network for your professional development. Please subscribe to the SNB Experts YouTube channel to stay connected with our community and access future updates. Congratulations on completing this 17-module masterclass. Goodbye, and we look forward to your future successes in financial modeling.